Good evening, ladies and gentlemen. We'll be starting the webinar in a few moments of time as we allow the participants to join in. So just to keep you posted, you can join this webinar via the Zoom link that has been sent to you. That is if you are a registered participant, but if you are not registered, you can just go into Facebook and go into the First Capital page, and we are going on a Facebook Live, and you can watch the webinar through that. So let us wait now for a few moments. Good evening, ladies and gentlemen. The time is 3:30 p.m. and let's start off our webinar from here on. First of all, we would like to welcome you all for the first equity forum organized by First Capital. So we've done many forums in the past in terms of economic outlooks or even investment strategies, but this equity forum is the first of its kind. So looking at the current economic uncertainty, First Capital research view is that there is a significant possibility for interest rates to be on a upward trend and the current currency also to depreciate further. In that limelight, our focus has shifted towards the life insurance companies, the banking companies, and the dollar income companies. So I did mention life insurance because out of the insurance companies, we are basically more positive on the life insurance segment. Moving on to the webinar. So this webinar will be of twofold. First, we'll be going into the presentation on the life insurance sector, and then we'll be moving on to the panel discussion. So I would like to remind the audience that if there is any questions, you can post it on the Q&A section of this Zoom app, or if you're joining via Facebook, you can put your questions down in the comment section and we'll be taking them on in the Q&A section or the panel discussion. So let's straight away dive into the life insurance sector presentation and to understand why we are so positive on the sector. The presentation is conducted by Hiruni Pereira and Achyutan Srirangan. So I would like to hand over proceedings straight away to Hiruni Pereira. Over to you, Hiruni.
Thank you, Dimanta. Let me share the screen first, presentation first. Okay, so let's begin with the presentation. So the secret to investing is to figure out the value of something and then pay a lot less. So we think investing in the life insurance industry as a value investment because insurance industry is comparatively underpenetrated compared to the regional peers. So with that, let's start our life insurance sector report. And our theme is rising interest rate, a lifeline for life insurers. So our report will mainly consist of 5 sections, where under the first 3 sections, we will discuss about the key investment considerations, where we are going to discuss why we are going to recommend to invest in this industry. And under section 4, we will discuss about our hot picks in the life insurance sector. And under the section 5, we will briefly touch on to the industry challenges. So before moving on to that, let me give a brief overview about the industry. So as at 31st December 2020, there are 27 life insurance companies. Out of that, 13 companies are engaged in the life insurance, whereas 12 companies are engaged in the general or non-life business. And 2 companies are engaged in both life and non-life business. And those companies are namely Sri Lanka Insurance and MBSL Insurance Company Limited. So in this table, you can see insurance companies categorized based on their nature of business. So you can see in terms of the long-term insurance or life insurance, Selingco Life is dominating with a total asset base of rupees 133.5 billion, whereas in general insurance, Allianz Insurance is dominating with a total asset base of rupees 29.5 billion. Now let's move on to the first section of our insurance report, where we will discuss what sort of impact the upward trend in interest rates will have on the life insurance companies. Over to you, Achyutan.
Yeah, thank you, Hiruni. And for this section, we are going to discuss about the potential upward, the trend of the interest rate will have we feel that's going to have a triple effect in the life insurance. And moving to the next slide, and we are seeing because the private credit and the government borrowing are now competing in the junction now, because the both credit, the private sector credit means the private individual the companies who are getting a credit, and the government also getting the credit from the market, which we feel the private credit for the first 4 months of 2021, and we seen a 3.5% growth in the private sector credit growth, and we First Capital Research forecast a 12% growth for the 2021 and 22. This 12% compared to the last year, and like 2019 and 20, for this is more than 2 times actually, because last year we seen a 6.4% growth, 6.4% growth, and percentage growth what we are forecasting for 2021. And the second chart we are seeing here, the government total rupee and the USD bond, the maturities are spiking in 2021. Because when you see the second chart, the third, the bar, actually, the government rupee bond maturities increased from 299 billion to 514 billion in the 2021. Not only the rupee bond, the Sri Lankan development bond and the sovereign maturities also having a big impact on the 2021. And for this is following for the next year also, because normally when the government when the budget deficit is government percentage from the local and 50% from the foreign. Now the government, they don't have the foreign borrowing, actually they need to borrow from locally, and which will give a more pressure to the local interest rate. And when you move into the next slide, because Sri Lankan foreign reserve asset May, we have $4 billion USD dollars in a reserve. The June foreign reserve also similar to the last May, but our debt repayment in US dollar, including a sovereign Sri Lankan development bond and project loan, which is in the foreign currency term, for next 12 months from the month of April, what the data we have, it's more than 7.9 billion, which means we can't pay, or we can't pay the what are the debt obligation we have for the next 12 months from our reserve, and which means they need to borrow from locally to sustain the debt repayment. Plus we need to get some sort of the swaps from the foreign countries to servicing those loans. With that, and we feel the Sri Lankan rupee bond, the First Capital Research is pushing the band, actually, because this band, the First Capital Research created for the fixed income recommendation, and we have the band with the lower band, the lower limit and upper limit, and we are giving recommendations to the fixed income traders where the rate should be. Because currently what we feel, actually the second half of 2021, and we might see the pressure from the government borrowing side, which will push the government yields for second half of the latter part of the second half, which we feel the 50 bips mean the 5 year, like 1 year, what we feel, actually the 1 year moving to a 6% mid rate, and the 5 years is moving to 7.5, and then 10 moving to more than 8.5. That's the band what we are referring. With that, how the life insurance going to get a benefit, we'll discuss in the next slide. For this, actually normally they are creating a revenue or earning a revenue from the investing in the fixed income securities and another kind of security. We've seen, actually the life insurance income, it's gradually moving up from 2016 to 2019 when the rates were high, and for 2020, and we've seen a drop because the market rate of the fixed income security drastically came down, and we feel the pressure of reversing the bond rate, which might give a more investment return to the life insurance fund. For that, we are predicting 21 and 22. We might see the reversals of the investment return for the life insurance company. When you move to the next slide, for the life insurance sector, for what I said before, they're having a fund and second quarter 2020, and we seen a life insurance sector, the most of the funds are lying on a 41% fund are lying on a government securities, which have the minimum threshold of 30% set by a regulator. For the second one is a corporate debt, for which mean like a government, the government banks or financial institution debenture or listed or unlisted. For those are 20%, and 16% it's coming from the bank deposit, and the financial institution deposit is coming on 16%. Only 5% of the fund only invest in the stocks, and we have a balance 80% of the total fund investing in another financial instrument, which we feel the increasing in the rate will create a more return to the life insurance one, because most of the things are in a the fixed income securities, most of the funds. When you move to the next slide, we can see the how the life insurance getting fund, because we've seen Selangor Insurance having a highest life insurance fund, the size as at 31st of December, they have 106.5 billion, and followed by the Union Assurance 42.9, and Softlogic and ASU have 17.5 and 17.1 respectively. Those are in a billion terms, right? And which we feel the higher the life insurance fund, the company which having a life insurance company, they will get a more benefit, because you know when the rates are going up, the depend on the fund size, the profitability also linked with the size of fund. Because when you are seeing in a second chart, we seen the CAGR of for the CAGR mean like for the average growth when you compare from the particular year from the 2013 to 2020, and we seen a very high growth on the life the fund for the most of the companies and for the new company. But Arpico Insurance, they showed a 43.3% of CAGR growth of fund. But when you take the Arpico Insurance, the size of fund is very small, like 1.9 billion. But when you see the Softlogic Life and Hasu, because they have a moderate size of fund, like 17.5 and 17.1, but their growth, what we seen actually in the last 6 years, they post more than 24% growth in their life insurance fund. But the largest fund like Union Assurance and Selangor Insurance, their growth is around like 12.3% and 10.5. That means the smaller companies also a very high growth, for which means the next for the future for the companies having a growth in their life fund will add on more profit to the company's bottom line. When you move to the next slide, because as mentioned, how the rate will support for the life insurance company, because life insurance company managing a fund for the policy holders, because when the rates are coming down, what will happen, because they need to maintain the life insurance funds return, they need to transfer the part of the profit from their the profit loss to the life insurance fund, for which we can see when the rates are high, they need to provide a very little amount to your fund. When the rates are low, they need to provide more, which you can see in the chart actually 2012, when the rates are at a high, the contractual liability changes are very low. In 2015, when the rates are moving up, for the rates are coming down, they need to provide more to the contractual liability. We feel for this, because when the rates are moving up, currently the contractual liabilities, they are providing at a high percentage, which we feel that will coming down gradually when the rates are moving up. Moving to next slide, we see because not insurance insurance like banks or finance company, insurance companies are also having a risk-based capital ratio, because they need to manage a ratio to perform their business. For the life insurance company, the minimum requirement of the capital adequacy ratio is 120%. But when you see the chart, for the chart actually, because most of the companies capital adequacy ratio that's more than 300, which means they're having more than 2.5 times of capital what they were supposed to have, which means when they are growing in the future, the capital adequacy is not going to be constrained for those companies. And the total capital ratio, the total capital for the life insurance companies of 500 million. Most of the companies are, have those 500 million in basic capital, which we feel actually the capital side, the most of the insurance company are ready for their next phase. Because so far we discussed about how the rising interest rate will help for the life insurance company, because now the COVID-19 changed not only insurance companies, a lot of the sectors, and how the life insurance sector changed with the COVID-19, and for that's going to be discussed by Hiruni. Hiruni, just over to you.
Yes, thank you, Archudan. So let's look at how the COVID-19 has become a blessing in disguise for the life insurance sector. So we know that 19 created insecurity among a lot of people. So this insecurity has created more demand for the life insurance products, because it was like a wake-up call for most people to reconsider their health and life insurance needs. So as you can see, some of the segments in the industry like motor segment, fire and property, travel got negatively impacted. Segments like life protection and health got positively affected because of the higher risk awareness of the people. We think this augurs well with the low penetration in Sri Lanka. So as you can see in the chart in your left-hand side, Sri Lanka has low life insurance penetration compared to the region. So penetration we have measured into indicators, that is life insurance premium per capita or per person, and life premium as a percentage of GDP. So when you consider life insurance premium per capita or per person, it's currently at a very low level of $23 in 2019, and it's relatively low compared to the regional peers. And same as that, life premium as a percentage of GDP is also very low. It's at 0.6%. Relatively low compared to the regional peers. So we think this low penetration low life penetration in Sri Lanka is mainly due to the country's culture, where our country is largely characterized by the collectivism and dependency. That therefore the need for life insurance product is yet to realize, and Sri Lanka has more room for further upside in the future. And if you consider the chart in your right hand side, it shows the total gross written premium percentage by region. So in 2019, North America has accounted 34%, and Western Europe 27%, and Asia excluding Japan and China has accounted for 12%. By 2030, this proportion is going to change, and North America is going to account for 30%, and Western Europe is going to account for 20%, and Asia excluding Japan and China proportion is going to increase from 12% to 16%. So among the Asian countries, Sri Lanka is expected to record a growth of 20% in 2021. And when the Asian region is expected to grow, it's going to be a further sweetener for Sri Lanka's growth trajectory. This chart shows that GDP growth of our country, and the life insurance GWP growth has a positive correlationship. And we know in 2020, we recorded a negative GDP growth of -3.6%. But by 2021 and 2022, we expect GDP growth to improve and record at 3.2% and 3.8% once we ride out of the pandemic. So due to the positive correlations, we expect with the GDP growth, life insurance sector GWP growth also to improve, and we expect GWP growth to record at 20% in both 2021 and 2022. And more interestingly, what we should note is even with the negative GDP growth of -3.6%, life insurance GWP growth has recorded 16.1% in 2020. So this is an S-curve. So this is a line S-curve drawn between the GDP per capita and life insurance premium per capita as a percentage of GDP per capita. So you can see currently Sri Lanka is at a very lower position compared to the other countries, and currently our GDP per capita is somewhere around $3,800 levels. But we have a target to achieve GDP of $5,000 by 2025. So we think when our GDP per capita is going to increase, life insurance premium penetration is also to increase, and we expected to reach a higher position in this S-curve in the medium term. And also talking about the demographical changes or the changes in the population, we have noticed that NCDs, or we call it non-communicable diseases, or diseases that will not spread from one person to another. So some of the examples are cancer, high cholesterol level, heart attack. So those are the examples for the non-NCDs. These in Sri Lanka, these deaths, NCD related deaths, have accounted for 83% of total deaths, and it's very high compared to the other regional countries. So with this high risk of NCDs, people have looking for more health insurance and life covers. And we think this augurs really well with the insurance industry growth. So 2014 to 2020, life insurance sector has achieved a compounded annual growth rate of 15%. And in light of the above factors, we expect life insurance sector gross written premium to record a compounded annual growth rate of 18% from 2021 to 2023. So with that, by 2023, we expect life insurance sector gross written premium to record a value of rupees 170 billion. Now, under the 3.0, we discuss about the technology. So technology has become a game changer in post-COVID era. So not only in the insurance industry, but in many other industries, including banking and etc. So with the wake of COVID-19, insurance companies have also introduced various technological platforms. So from the front end, a lot of insurance companies have introduced mobile apps and other technological platforms. So for an example, SoftLogic Life, they have this mobile app called Life Up app. So through that, their clients can pay the insurance premium and also check their policy details. And also Union Assurance have a mobile app called clicklife.lk, and through that, they can do their insurance related transactions. So with this alternative use of technology and the distribution channels, life insurance sector gross written premium per agent has come down. So that is because the gross written premium has seen an increasing trend, whereas the number of agents occupied in the industry has come down with the use of alternative distribution channels. And also from the back end, insurance companies has really automated their processes. And with the after the COVID-19, insurance companies, due to the automation, now they can fully work with the work from home arrangements. So with that, expense ratio of the life insurance sector has been gradually coming down. And in 2017-18, we can see this expense ratio has been hovering somewhere around 50 levels. Now it has come down gradually due to the automation. And by 2025, we expect this ratio to reach 38%. Okay, so now let's look at the hot picks in the life insurance sector. So our main hot picks are Selinco Insurance, SoftLogic Life, and HNB Assurance. So the main reason why we are selecting is based on a couple of indicators. So the first indicator is the PE ratio. We call it price to earning ratio, where we calculate price of a share divided by the earnings per share. And also we consider the life fund value of each company. So when we sort these companies based on the PE ratio, so you can see Selinco Insurance PE has the lowest PE ratio in the industry, and then Arpico Insurance, HNB Assurance, and SoftLogic Life. And when you consider the life fund, Selinco Insurance has the largest life fund value. So why we have selected Selinco Insurance PLC is due to the lower PE ratio and also higher life fund. And Arpico Insurance, we have not selected due to relatively lower life fund value. Next counters in line are HNB Assurance and SoftLogic Life. So in addition to the PE ratio and also life fund value, we have also considered the key investment strategy behind these companies. So when it comes to Selinco Insurance, they have the market leadership in the life insurance sector. They have a market share of 21% in terms of the gross written premium. So when the insurance industry penetration is going to increase, they will benefit as a market leader. In addition to that, they have the largest life fund value, as I mentioned before. So when the interest rates are going to increase, they will benefit. They will be a major benefiter due to the lower provision to the life fund. So due to their market leadership, we have named it as spearheading the life insurance in Sri Lanka. So when it comes to SoftLogic Life, so as we mentioned before, SoftLogic Life has witnessed aggressive growth. And in terms of the number of policies, they have grown at a faster pace, and life sector gross written premium growth has achieved compounded annual growth rate of 30% during 2015 to 2020. In addition to that, it has the highest ROE among the listed players, amounting to 16%, and lower claim ratios of 25.9%. So in addition to that, SoftLogic Life has been extensively used the state-of-art technology in approaching and servicing the client. So that's why we have named it as preserving the evolution. HASU or HNB Assurance, we expect HNB Assurance to benefit from their strong brand name of HNB. So with that, we expect HASU to expand their market share while using the HNB branch network. So in insurance industry, we call these as the bank assurance. And that's why we have named it as leveraging on the bank assurance. So now we'll briefly touch on to the industry challenge. So one of the main challenge that insurance industry will face is the adoption of IFRS 17, or we call it International Financial Reporting Standard 17. So currently insurance industry is adopting IFRS 4, but with effect from 1st of January 2023, insurance companies will have to adopt the IFRS 17, the new standard. So with that, there will be significant changes in terms of the financial reporting. So this will be discussed in much detail during our panel discussion. And with that, we come to the end of our presentation. And I like to remind about the statement I made before. The secret to investing is to figure out the value of something and then pay a lot less. So intelligent investors can earn better market returns by identifying the hottest sectors and also by identifying the companies performing within those sectors. So with that, we come to the end of our presentation, and I'd like to hand over to Dimantha for further proceeding. Thank you.
Yes, thank you very much, Hirni and Achyutan, for that insightful presentation on the life insurance sector. So now is the segment that you all have been waiting for, the panel discussion. So in the panel discussion, we will be covering about the life insurance segment, and also there will be a discussion on the port city. So today we have with us a very eminent panel, experts in their respective fields, I would say. So first of all, I would like to welcome Mr. Iftikhar Ahmed, Managing Director of SoftLogic Life Insurance PLC. Mr. Iftikhar Ahmed was appointed Managing Director of SoftLogic Life Insurance PLC in 2014. He also heads the financial services sector of SoftLogic Group and is the Managing Director of SoftLogic Capital PLC, which is the financial services holding company of the group that has interests in insurance, leasing and finance, and stockbrokering. He accounts for over 30 years of experience in a wide range of matters within the financial services industry and has extensive banking experience both in Sri Lanka and overseas, having held senior management positions as Deputy CEO at Nations Trust Bank PLC and Senior Associate Director at Deutsche Bank AG. He holds an MBA from the University of Wales, UK. And next, I would like to introduce Mr. Prakash Shafter, another pioneer in the insurance sector. Mr. Prakash Shafter, Executive Chairman of Janshakti Insurance PLC, was educated in the University of Cambridge. He has over 3 decades of experience in the insurance industry in both Sri Lanka and the United Kingdom. He led Janshakti as Managing Director from 2006 through a growth phase that saw Janshakti becoming the 3rd largest non-life insurer. He was instrumental in acquiring the non-life segment of AIA Insurance Lanka in 2015 and also led the divestment project of Janshakti's non-life segment in 2018. Prakash is a former president of the Insurance Association of Sri Lanka and continues to impact the business sector through his membership on the Council of the Sri Lanka Institute of Directors. He served on the boards of several listed and unlisted entities, including the Bank of Ceylon, and has been amongst the youngest fellow members of the Chartered Insurance Institute. He has also served as the president of the Young Presidents Organization of Sri Lanka. A former first-class cricketer, he represented both the University of Cambridge and London University during his cricketing career. He has also served as president and secretary of the Tamil Union Cricket and Athletic Club. He is a former secretary of the Sri Lanka Cricket, having served on 3 separate occasions on interim committees appointed by the government. Next, we have Harshini Deshapriya, who will be providing insights on the Port City Act today. Ms. Harshini Deshapriya is the Group Chief Legal Officer of Janshakti Limited. Harshini possesses 15 years of work experience, including 12 years as corporate lawyer with an extensive exposure towards capital market regulatory work, corporate affairs, and activities in diversified industries such as manufacturing, real estate, insurance, investment banking, and finance. Her professional expertise ranges from various foreign and local investment activities, including company takeovers and mergers, corporate finance and advisory services, dealing with foreign hedge funds and exchanges, international commercial arbitration, and contract management. Harshini holds a Master's of Laws in International Business and Commercial Law with a merit pass from the University of West London, and she was awarded Outstanding Performance Recognition for the highest average in dissertation. She obtained a Bachelor's of Laws with honors from the University of Colombo Faculty of Law, and she admitted as an attorney at law in Sri Lanka with honors. Harshini has also obtained a professional qualification in Human Resource Management from SLIPM, Sri Lanka with a merit award, and has successfully completed the post-attorney diploma in corporate law with a merit pass from the Advanced Legal Studies Unit of the Sri Lanka Law College. Prior to joining Janshakti Group, she headed the legal division of Lanka Century Investments PLC Group. Finally, our moderator for the evening will be Mr. Dilshan Weerasekara, Director CEO of First Capital Holdings PLC. Dilshan is also a director of the Colombo Stock Exchange. Dilshan Weerasekara is an investment banker by profession with a career spanning over 25 years, comprising of diversified expertise in financial services, including banking, treasury and investment management, capital market strategy, and corporate finance advisory services. He is an alumnus of INSEAD, having completed his executive professional education at INSEAD Business School, France. He is also an alumnus of AOTS Tokyo, Japan. He was a former general manager of SoftLogic Capital PLC, guiding investment and trading portfolio management across subsidiaries, inclusive of groups, licensed finance company, composite insurer, and equity brokerage. Prior to which, he was the head of treasury at Nations Trust Bank PLC. With that, I would like to again remind our fellow audience of the questions that you have. You can post your questions in the Q&A section of this Zoom app, and also you can post your questions from in Facebook, in the comments section of the Facebook. So with that, I would like to hand over proceedings to Dilshan. Dilshan, over to you.
Thank you, Dimantha. Thank you very much for that kind introduction. And welcome, firstly, to the panelists joining me, Prakash, Iftika, Harshini. Thank you for taking time and coming for our webinar. Also a warm welcome and good evening to all the participants, attendees across Zoom and all other social media platforms. So let's get right into the discussion. I think we've heard Achu's and Hiruni's view on the life insurance sector with a fairly bullish report on the industry as a whole, as well as their hot picks in terms of the counters. I would like to first sort of direct the first question until we get some questions from the audience to Iftika. Iftika, the pandemic has put the insurance industry on a fast track to adapt to digital technologies. Traditionally, a person-to-person sale, which was what insurance was some years back, has now changed. And I think SoftLogic Life has sort of been at the forefront to capture market share there. Could we just have your view in terms of how you see the transition to digital technology-driven client acquisition, transition happening in the industry, and what changes in the current status quo you expect to see in the coming years.
Yeah, thank you, Dilshan and First Capital for having SoftLogic Live on this forum. We're very happy to be here. We are happy also to see the life insurance industry being portrayed in a very positive light. And if I can respond to what Dilshan just mentioned. So COVID came, it hit us all with a lot of surprise. So we've now seen 2 years of this. We have seen 2020 and we have seen 2021. Right? As we all know, and as was pointed out in the report that First Capital has put out. So last year, despite the country having a negative growth, life insurance went up by 16%. For the first time in the industry's history, the industry crossed a very important milestone of 100 billion rupees in GWP, right? Very significant. Right? And on the back of this, for the first 3 months of 2021, what we have also seen is the industry is up 34%. Right? We were 21.7 billion GWP last year. We've gone up to 29.1 billion in the first quarter of 2021. So there are, I think, some base case effects, because if you remember, the first wave of the pandemic came up in somewhere towards the end of March last year. So to that extent, there can be a little bit of a disruption or some dislocation in that number. But I think what you see when the first half number is out, that means for June, for the first 6 months of 2021, you will, I think, find that number also going up substantially. And if you just annualize the number that has been seen for the first quarter, I think the First Capital growth rate forecast at 20% for the industry is probably on track. Coming down to in terms of COVID and what the reaction on the ground has been. So as we all know, life insurance has traditionally been sold by advisors or agents who actually visit customers. There is usually a fairly, a rigorous sales process behind that. And at the end of the day, it's a face-to-face meeting at which an advisor convinces a customer to actually take up an insurance policy. Now, these insurance policies tend to be very customized based on the requirements of an individual. So that is why it requires that face-to-face effort. And there is a considerable amount of time that is spent in actually achieving that sale. Now, with the pandemic, I think we saw first wave in March last year, second wave in October, and then this year, the third wave once again in May. That in the first 2 instances, we saw immediately a drop in terms of the new business that was coming in, right? Because obviously it caught a lot of us by surprise. And by the time the second wave came in, we saw the adaptation already starting to fit in. For example, at SoftLogic Live, all our advisors now have a digital device. All proposals are sent on a digital basis. So I think a lot of other companies are very similar. And by the time the third wave actually came up, and if I describe to you what the experience has been at SoftLogic Live, in the month of June, as we all know, I think there were only 6 working days, but we basically hit 100% of our budget, right? So, which means that all the networking, all the prospecting, all the execution has now moved on to digital channels. Things have got very efficient in terms of the industry and in terms of a lot of players adapting digital methodologies. And this, I think, is standing the industry in very good stead, because with COVID has also come the discipline of looking at your expenses, looking at your costs, and obviously digitalization and being efficient is one of those key elements that have actually taken place. So net, what has happened is that we have moved on to a much more efficient platform. And on the back of that, what has happened, which no amount of advertising can do for the insurance sector, is the awareness that COVID has created in terms of protecting one's health and one's life. And that we see as a very big positive in terms of life and health insurance. Dilshan?
All right. Thank you, Iftikhar. Thank you for that very insightful answer. Prakash, I would like to move to you next and maybe also look at, obviously all businesses are facing a very challenging environment due to the pandemic. So what has maybe Janashakti's experience been, and how do you see the life insurance business sort of again changing into the future? Would like to know your thoughts.
So as Ifti said, COVID was sudden, it was totally unexpected, and the impact of it was, in a sense, devastating and widespread. We didn't anticipate the lockdown that we had in Sri Lanka. It was virtually overnight. And the challenges that we faced were manifold. I like to split it between operational challenges, which is staff and agent related, and customer related. So from an industry perspective and also from Janashakti's perspective, our infrastructure was largely in place. We were able to shift to work from home arrangements pretty quickly, and the industry adjusted. We also had agents, and our sales force were already on tabs. That process was accelerated, and we found that they too were able to conduct business remote. The real challenge was customer interaction. Our industry has over the past many years, decades in fact, been foot soldier led. So the fact is that customers are used to our agents calling on them and collecting premiums even after a policy has been incepted. And as far as new business was concerned, it was almost entirely personal, where customers were visited or potential customers were visited and the business clinched. From a digital perspective, yes, insurance companies were nimble and had digital solutions readily available. Did it make much of an impact? I don't think it made much of an impact from a new business perspective. But from a renewal perspective, the fact that we looked at alternate payment channels and, shall I say, signed up agreements with multiple service providers meant that renewal premium collections were enabled. And our renewal premiums didn't see much of an impact, especially in the first wave of COVID. There was some impact, certainly yes, but not as much as new business. Going forward, as far as Sri Lanka is concerned, I see further digitalization happening. Insurers will continue innovating in this space, but whether it will actually impact on new business in the shorter term, I doubt it. But in the longer term, certainly it will help. And I think insurers need to focus on digital channels for selling insurance. From another perspective, I think there is a greater opportunity to drive awareness amongst the general public on the need for insurance. And I think insurers should use this opportunity to convey to members of the general public the need for insurance. And hopefully there will be greater receptivity to amongst the general public for life and health insurance. So if they covered also the fact that the insurance industry has seemingly done well because of COVID or despite COVID. And I think, yes, we have seen an impact, a positive impact this year. We are having very healthy growth rates compared to last year. That's partly because of the fact that last year did not do as well as we anticipated. But certainly there are other macroeconomic factors which have helped the insurance industry grow this year. Longer term, however, if we see an economic decline, I'm sure there will be a negative impact on the industry. I hope I've covered what you
very much. Thank you, Prakash. And once again, a reminder to our participants that you can submit your questions. We've got a couple already, but I'll take some of those up. So please do submit them in. If I can move back to you, I think in the presentation, we saw that insurance or life insurance penetration as taken as a life GWP as a percentage of GDP is less than 1%. And obviously there's room for expansion there. How do you foresee that penetration in the next 5 years? What do you expect that 0.6% to grow to? And what do you believe are maybe some of the key catalysts that can really drive that sort of, exponential growth?
Yeah. So if you, I think once again, if I refer back to the First Capital report, and if you look at the what's going on in the nearby countries in the region, what you will see is that Sri Lanka is significantly underpenetrated, and therein lies the opportunity for life insurance in Sri Lanka. So if we take an example, like let's pick Thailand, right? Now, Sri Lanka's GDP per capita is below $4,000, I think about 3,600. And if you take Thailand, I think it's around $7,000, right? And if you look at the penetration there, that's at I think 3%, right? So if you just do the simple math, that means that if our per capita gets to close to $7,000, we have a 6 times upside in terms of the life insurance industry in Sri Lanka. So what was then 100 billion, the potential is 600 billion. So no doubt there is a very close correlation in terms of the growth of the country, and that is what we are hoping will take place. But what COVID has done is it has increased awareness. So even though growth might be a little slower, we think the development of the industry perhaps can be stronger and will take place at a faster pace, right? But if you just look at it in terms of numbers, and if you look at the whole peer story, the potential is immense, the potential is substantial, and based on that, we see significant upside for life insurance in Sri Lanka, being one of the companies that has posted the strongest growth, the strongest momentum. We think we are very well poised to capture any upside or whatever upside that comes up in the life insurance industry. Desha?
Thank you. Thank you, Iftika. Iftika, I'm going to stay with you and direct a question that's come up from our audience. The question is, how is the increase in medical and hospital cost impacting the claims cost for SoftLogic Life? And do you expect this to increase?
Yeah. So the strange thing that happened not only in Sri Lanka, but I think across a number of health portfolios around the region, is that as soon as COVID happened, people got very nervous about actually visiting places where they felt that they could get infected, right? So, and a hospital is normally where you go, and then that's where the medical, basically the expenses come from. So people stayed away from hospitals. They stayed away from doing regular routine or procedures that they could postpone. And as a result of that, what we saw in 2020 was that our claims ratios actually dropped, right? They dropped significantly. I think in our case, it was almost like about 30% below what we had budgeted at the beginning of the year, right? So that was from a P&L perspective something quite positive. And that's, I think, one of the reasons also across life insurance and health insurance last year, insurers tended to post good results. Coming into 2021, what we have seen is that there have been a number of intermediate care centers that have been set up, and so obviously, if someone tests positive and goes into a COVID intermediate care center, that is, we are treating that as an expense that was not expected. And from the insurance industry perspective, I think SoftLogic Life plus a number of other insurers are paying those claims. So those claims have now started to come up. Once again, the good news is that we saw that spiking in May, but with June, and as all of us know, things have subsided somewhat. So that has kind of now dropped off a little, if you look at it on a kind of week-on-week basis. So if that continued, there would have been probably an impact. But once again, when the lockdown comes, people don't go to hospital, you see the drop in the claims. That drop in claims is compensated to some extent by this intermediate care type expenses, and that tends to kind of balance it off. But by and large, it remains on what we expected, what we budgeted. So that's where things are as of this point.
All right. Thank you. Thank you, Iftika. Prakash, if I can move back to you. I think we know the insurance industry is sort of quite sensitive to changes in interest rates. And in our report, we saw First Capital Research is calling that rates will sort of move up. Firstly, I think we've got this question from the audience as well. What are your expectations on interest rates for the remainder of the year and 2022? And how do you really see that impacting the insurance sector?
Once First Capital has given their view, and I disagree. No, on a serious note, I tend to agree that there is a likelihood of an increase over the next 12 to 18 months. So I do see an increase in interest rates. From an insurance industry, I think it will certainly help us because we will have high investment income, especially in the longer term. But there is also another dimension to which insurers are exposed, and that is the asset liability mismatch. So from an ALM perspective, the increase in interest rates could have different impacts on different insurers depending on how they have structured their ALM.
Right.
So it would be company specific. And I'm guessing that with the impact of COVID, a lot of insurers took a much deeper dive into how they've structured their portfolio, how they're doing their calculations. And I think the impact of, the impact of interest rate increase or decrease would be less than in the past.
Okay, thank you, Prakash. Prakash, I'm going to stay with you. There is a question from the audience that has been directed to you in terms of with the greater emphasis on digitalization of the insurance industry. The question being asked is the current infrastructure sustainable to meet the increasing demand? An example that is given is that current online education has been a big challenge, especially in the rural areas. So, how could you respond to that?
So it's a bit of a tough question. The question is whether the current infrastructure is adequate. So from an infrastructure, I think what we insurers can do and should do is to make digital products available. And that process has begun. Certainly there is a lot of room for improvement, but that process I see as ongoing and it will continue. I do agree that the bulk of the population does not have access to computers and technology, but that's going to change. I mean, it's evolving and I see it moving in a particular direction over the next few years. So it will enable the digitally enabled products developed by insurers to be made available to a greater portion of the population. But I'd like to go back to what I said earlier on, which is that our industry has over the past many decades been foot soldier driven as far as new business is concerned. And I frankly don't see that position changing drastically. Digital sales will continue to grow, but my take is that it's not going to acquire a significant portion of the market where we are going to see a huge uptick because of digital sales.
Okay, thank you, Prakash.
Okay.
Moving back to Iftika, I think we mentioned in the report as well, IFRS 17 coming into play on the 1st of January 2023. What challenges would insurance companies face as a result, and what would be the impact on financial reporting for these companies?
Yeah, so Dilshan, IFRS 17 is a big one, right? It is going to fundamentally change the way in which insurance actually operates. It has the potential to change it, right? Because see, the way in which you would look at a company, the way in which a company would run its business strategy could essentially change, because the way you measure it, the way you monitor it, and then what is most important in terms of an equity forum like this, the way you value it, right? So that is something which is going to change the insurance industry in a substantial way, right? At the heart of this is, I think, where each company's kind of, I think they call it CSM, contractual service margin. The margin that you make on each product is basically going to come out in front. And so then it depends on what kind of products is the insurance company actually selling, right? We tend to have investment products and protection products, right? The margin on the protection products tends to be higher than investment products, right? Investment products normally come with a small margin. So these are the implications, I think, of IFRS 17. And obviously, it requires a substantial investment also in the systems that are required or that are needed to actually do these calculations. As you know, especially when it comes to life business, not so in the general insurance business, but in life business, because of the long tail of the business, insurance contracts in life go to 15, 20, 25 years. And as a result, those calculations are very complex. And that is where, actuarial expertise is actually required in a fairly heavy measure to do these things properly. So I think what's going to happen with IFRS 17 coming is there is going to be ways in which insurance companies will understand, should they continue with the same strategy that they did previously? Should they change some of their products? What margins are they getting? What are their costs? IFRS 17, I think, also will allow you, in the case of certain acquisition costs, to be able to take the costs along the way. So that, like that, there are a lot of things that will happen. The immediate issue is going to be the lack of talent, the lack of expertise, because we need in two areas. You need on the actuarial front and the financial front people who really understand this. And if the whole world is going to IFRS 17 roughly at the same time, obviously there is only a limited pool of resources who have the expertise in this area. So that is going to be one big bottleneck. Plus then the cost, right? It's the cost of actually putting these systems in place, doing the training, doing the conversion, doing the implementations, all those parts of it. Now, IFRS 17 was supposed to go to start in 2023, but that was, I think, a pre-COVID timetable. Now, with COVID happening and with a lot of things not working the way that they used to in terms of timetables, it might be likely that there could be maybe a delay on the start, but that is something that has to be seen. It depends on the readiness of various industry players, how well they can access the resources, how expensive are the resources, are we able to pay for these resources now itself, at the end of the day, they have to come from, they are not within Sri Lanka, they have to come from outside. So we have to be able to afford this, both as companies and as a country. So like that, there are a lot of factors at play, right? And whilst there is no debate that IFRS 17 will come, and it is something that is actually, I think, required and desirable from an insurance industry perspective, the actual timeline of this, there might be some changes.
Right. Thank you, Astika. Prakash, moving on to you, I think we've got a question here saying that there are 13 life insurance companies operating in Sri Lanka. However, the top 6 command nearly 90% of total assets of the sector. Do you think the industry requires consolidation in the future? Are we having too many players or too little?
That's a question which has been asked of me, I think, for the last 15 years, possibly. Consolidation has been discussed for the last many years, as I said, but surprisingly, it has happened in the general insurance industry, where we have seen consolidations, I think, with 3 or 4 players. But surprisingly, it has not happened in the life insurance industry, which I thought, to be honest, would see more consolidation than the general insurance. You're asking me a tough question. I would suspect, if I'm pushed to answer, that some companies' capital and volume of business may not warrant them remaining in the business. But that is a commercial call which each company has to take. They've obviously made the decision to get into the business. But I would like to really focus on, and I would like the industry to focus on, how we could grow this market further. When he was answering one of the earlier questions, spoke about the lack of penetration of the insurance industry. We have a large untapped market, and every index of life insurance penetration shows us lagging even the other Asian countries, leave alone the West. We lag even countries like India, Pakistan, Bangladesh, if I'm not mistaken. So I would really like industry to focus more on not whether we require more consolidation, but how the industry can go out and grow the market, and how we can improve the penetration of life insurance industry. And by doing that, our contribution to the economic growth of this country can also be further enhanced. So if you look at the West, you will find that insurance companies play a major role in the economy because they have a lot of cash, they have a lot of savings, and therefore they become key players in the industry. So, or in the economy. So I would like us to move to that first.
Okay.
So I haven't quite answered your question on consolidation.
I know you glanced it away, but thank you for that, Prakash. I'd like to just move towards the port city discussion and maybe direct a few questions from Harshini. We wanted to cover the port city aspect as well. It's been a hot topic since the Port City Economic Commission Act was just passed recently. Warm welcome to you, Harshini. Sorry we kept you waiting for some time.
No worries.
We've got a few questions already, I think, on the Port City from the audience. But can I start off with asking you, I think the whole Act and how it was sort of passed, there was a lot of controversy around it in media. In terms of, the Act, do you think all necessary laws, regulations are in place to implement the project successfully? What kind of involvement or maybe even limitation do you think that the government of Sri Lanka is going to have on the port city?
Yes, Dilshan, good evening to you once again. As we all know, Port City law was one of the most discussed and debated topics during past few months. The reason being, people anyway had so much of doubts, concerns, queries in relation to Port City as an initiative. But when this piece of legislation was enacted, these doubts were answered to some extent. But there are so many areas left unanswered. But since you have asked from me whether there are sufficient laws to implement Port City as a project, then of course for the time being, I would say yes, but not in the long run. At the same time, if you ask from me whether it's a complete law, then it's very much questionable. Why I say for the time being, to implement Port City, there are sufficient laws. The Act provides laws essentially for the establishment of Port City, which is the Special Economic Zone and the Area of Authority, and also for the establishment of Port City Commission, which will administer, regulate transactions, affairs, businesses in and from Port City. And it also talks about there are legal provisions as to businesses of strategic importance, how project company as well as government marketable land will be dealt with, what are the key economic activities, so on and so forth. So these legal provisions form the skeleton or the structure to implement Port City as a project. But this should be fleshed out by the regulations, because when we come across some of these provisions, we see at one point we get stuck. Without regulations, we cannot interpret. For instance, now businesses with strategic importance, how the incentives and tax concessions will be decided with this. Those are based on investment amounts, whether based on slabs, structures, or for how long it will be given, subject to maximum period of 40 years. So those are unanswered. At the same time, if a local goes to Port City and buys some goods and services, then what sort of taxes to be paid? At the same time, if we take another example, authorized persons can accept Sri Lankan rupees for the goods and services that they provide to the locals. So how such will be converted to their own designated foreign currencies? So all these areas are unattended. But at the same time, Dilshan, I would think it's rather premature to decide on all these regulations. The reason being, we just established Port City Commission. They need to explore the investors, their mindset, their perspective, what sort of what would attract them, because it's a win-win situation between Sri Lankan economic advancement as well as investment benefit. So having explored these, only the regulations can be made which will be pragmatic and practical. However, these regulations, we expect them to be in the advancement of national economy as well as in the national interest. Since you have also asked from me about the limitations and government involvement, I behold less involvement in the government in the aspect of operations. As I told you before, Port City Commission administers, manages affairs and businesses in and from Port City. At the same time, the government and project company marketable lands are vested with the Commission. If you take the Act, Schedule 3 of the Act says the enactments mentioned therein are not applicable in Port City. So those enactments are Municipal Council Ordinance, RDA Act, as well as Town and Country Planning Ordinance, BOI laws, so on and so forth. I'm just trying to show you the limitations the government has when it comes to Port City. On the other hand, once the agreement is entered into between investors as well as the Commission, no one can arbitrarily terminate it. Unless there's a breach, of course. So that also can be seen as a limitation where government cannot intervene, especially with the tax concessions granted. So having said that, we can see the limitations, government limitations over Port City. But at the same time, we cannot totally disregard and exclude government involvement in the Port City. Because the prime example is Port City Commission is appointed by the President. Their remuneration, their termination, their time period also will be determined by the President. So we can see the link between the government as well as the Commission. Now, currently, the composition is 5 to 7 members, where majority shall be Sri Lankans. But if we see any variations to this composition, it will affect the national interest of the country as well. On the other hand, in lawmaking, there's active involvement in the government in the lawmaking. For instance, let's say when it comes to businesses with strategic importance, or maybe in terms of say, Schedule 2 of the Act, some of the concessions can be granted based on the Act specified in Schedule 2. So for that, cabinet approval should be obtained at the recommendation of the Port City Commission in consultation with the President as well as the subject minister. So we cannot totally deviate the involvement of government. What was said and done, Dilshan, I also think Port City Commission as well as government should work hand in hand to achieve the desired level of outcome that we expect from Port City, especially the economic advancement that we seek through this as an initiative. Why? Because extensive planning is required. Why we say so? Because there are so many economic benefits that we foresee. For if I take you for an example, the number of employment that should be generated, who's working on developing such kind of skill force to match with this by the time it's available. So similarly, in every aspect, government extensively should plan out to make this a success.
Okay, thank you, Harshini, for that. There is also a question that has come in terms of, can a local investor or a local company invest in the Port City? What type of businesses can be carried out within the Port City is a question that we've got.
Yeah, Dilshan, it's a good question. Rather, why I would say that there are no impediments or maybe hindrance for local investors, listed companies, or maybe panelists, insurance giants, or maybe foundations, partnerships, any type of companies to engage business in and from Port City.
Right.
Yeah. Act accommodates, however, subject to certain criteria. I would mention the criteria, Dilshan, because those are very vital and significant. In order to carry out business in and from Port City, only authorized persons can do it. Who are authorized persons? They are the one who obtain license from the Port City. So Port City Commission. So license should be obtained. And if you're a company, you need to register as offshore company in that category. If you're already registered company, then of course you need to re-register yourself as in that category where certain compliances that you can waive off. And also, if somebody wants to engage in offshore banking business, then they have to obtain license from the Minister of Finance with the concurrence of the Monetary Board of Sri Lanka. the most important significant criteria that I want to stress out and for all participants is, please don't forget this when you're structuring your investments within and from Port City. Investments made to carry out business within Port City shall be raised outside Sri Lanka. I will repeat for the benefit of them. Investments made to carry out business within Port City shall be raised outside Sri Lanka, which means you need to have foreign funds to engage business in Port City. So if you think there are no foreign funds, then of course, do you think that's the end of it, Dilshan? No, there are alternatives. So let's see what is this alternative also. This alternative would be if you are a person to whom the restriction of land, restrictions mentioned in the Land Restriction on Alienation Act do not apply, which means if you are not a foreign party or foreign company, then of course, if you have leased land in Port City, then together with an investor or consortium of investors who have foreign funds, you can apply to engage business within Port City. So for that purpose, your leased land, your investment will be considered as your investment. Any of the foreign benefit that accrued on your investment shall be remitted to foreign currency account. And there are, let me add two other things. I know you're running out of time because this is quite critical. Whereas there are some kind of funds are particularly excluded for the utilization of investment. So we need to remind what are these types of proceeds excluded. That is, if you have foreign currency deposit in a foreign currency account maintained in a license of Commercial Bank of Sri Lanka, and also if you obtain foreign currency loan from a license of Commercial Bank of Sri Lanka, such proceeds cannot be utilized for the purpose of investment in and from Port City. So on the other hand, figuratively, it says if you can raise funds through a loan or otherwise, if you have foreign funds outside Sri Lanka, such can be brought in.
Thank you, Harshini. I'll just another quick clarification. Can local individuals purchase residential accommodation at Port City is a question that has come up.
Yes, as I told you before, I don't know, I probably covered it, mainly to persons to whom the restrictions mentioned in the Land Restriction on Alienation Act do not apply, they can.
So any local essentially is not excluded from that?
Any local is not excluded that, yeah.
Thank you, Harshini. So let's move back to our other two panelists. And we will slowly wind this down. So if I may have Prakash and Iftika back. There's just one question pending. Let me direct that at Prakash first. I think the question is asking, why has insurance penetration been so low? So we know we spoke it's low, we've said it's going to increase, but the question is asking, why has it been so low historically?
If I knew the answer, I would have at least ensured that Janashakti did its part to fix the problem and we reap the benefits. Frankly, it's something which the insurance industry has been grappling with it for a long time, and we as an industry have to accept responsibility. And I would be the first to put my hand up and say that we haven't done what we really needed to do. But I suspect it's a lot to do with the culture of the country. If you look at even the lapse rates, only about 40 to 50% of the policies that are taken even survive up to the end of year one. And that's a huge lapse rate. It's much higher than even say somewhere like India, where general income levels are less. And I think, as I said, it's a lot to do with the culture of the country. We are an island nation, easygoing, happy-go-lucky mentality. It will never happen to us. So I suppose that spills over into life insurance. So we never really think that we need to take out life insurance. Or even if we take it, first time we have a bit of a crisis, we drop the life insurance and continue enjoying life. So that's my sure. Personal view anyway.
Sure. Yeah, so I think we are coming to our last sort of 10 minutes, and what I would like to do is sort of maybe get overall comments, concluding remarks from both Iftika and Prakash, but I would like to frame it in a perspective of we are facing a very challenging period from a macroeconomic perspective. We know obviously the challenges around government revenue, import restrictions, the forex issue. There is a shortage of foreign exchange in the country. So much so, I think businesses are now starting to get impacted. So in this very sort of stressed out environment, sort of bleak outlook from a country perspective, what advice would you really give investors out there? And maybe you can add whatever other concluding remarks that you may have. So maybe Iftikhar, you can start off first.
Yes, I think my final closing remarks would be that, as always, we are optimistic, right? We are very positive about the future. Whatever that is prevalent currently will pass, that's for sure, right? If we are sitting here in 12 months' time and having the same conversation, I'm sure we will be in a much more different environment, and things would have turned around and gone in a completely positive way. I think the good news is that we are at the beginning of the end when it comes to this whole COVID situation, right? And I think finally the government has got its act together in terms of the whole vaccination situation. With the vaccines now coming in, that should have probably been the strategy anyway, but now it is happening at speed. And once we get the vaccinations done, I mean, you just got to look, on TV, any sporting event that's happening in the UK or in the US. It's normal, right? So that's how it used to be. So that's how Sri Lanka is also going to be, right? So we have this situation now. We have to come out of it. The good news is I think we are probably at the tail end of it. Of course, we can't rule out another bout of infection that could happen always. But I think from an overall trend perspective, we are looking at the end of COVID-19, right? So that we should see the economy recovering and moving forward. From a life insurance perspective, people will always remember the pandemic. They won't forget this very easily. And I think what they will always think is, what is the next pandemic that is going to come around, right? This time it was COVID, next time what is it going to be? And from that perspective, people will think about their protection, they will think about their health, they will think about their loved ones. And from that angle, life insurance, I think, remains very positive from an industry perspective. From an investment perspective, I think First Capital has done a superb report in terms of what the industry should look like and what the valuation or what the prospects of the industry are. So we are very positive, right? We are very positive about how we face things. Whatever the difficulties that we have in the interim, these will pass. These are temporary. And I think we got to look beyond that. And we got to look beyond COVID-19, because I think after every pandemic, there comes probably an economic boom, an economic opportunity. So I think the main thing is to look out for that, be positive, stay focused, run your business and do well.
Thank you, Iftikhar. Thank you for that. Prakash, concluding remarks.
Well, Sri Lanka and Sri Lankans are resilient as far as I'm concerned. We went through a war, we've gone through so many challenges, and we've come out on top every time. So COVID for me is also a huge challenge. It's probably one of the biggest challenges we've faced, but I have no doubt that we'll come out on top. There are better times ahead, and we've got to remain optimistic, because only if we are optimistic will we have the strength and courage to move on. And I, for one, am personally optimistic that both the industry and the country will come out on top. If not this year, it's going to happen next year. So I'm hopeful all in all.
Thank you. So thank you very much to our panelists, Iftikhar, Prakash, and Harshini. I think a very insightful, useful discussion that should complement well with the reports that we've released from our research. I'm sure everyone enjoyed. I think we've covered almost all the questions that were directed to us, and we are on time. So a big thank you to the panelists, as well as a big thank you for everyone who attended this forum. I think we had about 170 on Zoom, but about another 200 on our social media platforms. So probably over 350 participants. Thank you to all of them, and we hope you enjoyed the webinar. A good evening to you all.
Thank you, Dilshan, and thank you, Pascal.
Thank you very much for having us.
Thank you very much.